Now, did you know that we just built more apartments than we have in 40 years? And we're about to build almost nothing. Something that created just a giant wreck in the apartment building industry is now going to create a giant opportunity. In 2024, like alone, we built more apartments than in 1986. And it affected a lot of my friends, right? And especially in the Sun Belt, Austin, Phoenix, even Atlanta. Rents went down 15%. Vacancies went down 9% as well. Occupancy did rather. So this is what a lot of people are kind of licking their wounds as well. And so they're now gun shy of multifamily. But here's what almost nobody is telling you. The same wave is the same reason that the next few years are going to look completely different. In the next 10 minutes, I want to show you why that is and the opportunity that can create for you. So what just happened here over the last 3 years, right? In 2024, we delivered over 600,000 apartment units. That's the most in a single year since 1986. Like we hadn't even crossed $500,000 in 30 years before this cycle. So we delivered 1.8 million units in 3 years, the biggest in history as well. And like for example, Austin, in 1 year, they added 10% of its entire apartment stock in just 12 months. And that has also never happened in any major U.S. city. And we saw it even in Atlanta, right? We had a perfectly fine Class B apartment building, and then a year and a half, 350 units of Class A opened up right next door, which normally lifts all boats. That's fantastic. But that wasn't the only building that came out of the ground. There was dozens of buildings in that area of Atlanta that came out. And what did they do to fill up thousands of units? They lowered the rent. And so that pushed our rent down of our building about $400 a month. Very difficult to overcome. And they offered concessions on top of that. That's the kind of pressure that we've seen in some of the Sun Belt metros. Now, here's why the next few years look a lot different, and also why this matters. So normally, multifamily investors really don't look at housing starts, construction starts, permits at all, but now it's very, very important. Like if you look at construction starts now, they're down about 77% from the 22 peak. That's not like a typo exaggeration, 77%, right? Which means that, well, no one's pulling permits anymore. Why? Right? Because it's too daggone expensive to build stuff and make more money. And why is it more expensive, right? Well, interest rates went from basically zero to well over 5%. And that's just, the treasuries essentially. Construction costs went up, labor got tight, also caused by immigration, things like that. And then we had tariffs on top of that. Now, oil has gone up too as well. Those are all pressures that drive up the cost of constructions. And now for new build developers, the deals are not penciling, right? So the permits don't get pulled. And even if the permit were going to pull today, which are not, it would take 2 to 3 years for those to come out of the ground. And right now that's not happening. And there doesn't appear to be an end in sight in the lowering of the construction costs, meaning that there is basically no new supply coming on the market. All right, now you might be saying, okay, Michael, great, but what about rate cuts, okay? Aren't we just one Fed meeting away from things turning around? Well, I hear you, and we have watched the interest rates and the Fed for the longest time. But here's the honest answer, okay? Fed funds rate is at 3.5 to 3.75% right now, right? And the future markets don't even price in the next cut until the middle of 27. Okay, so no one's expecting a rate cut, number one. Now, rates were the story in 22, 23, and 24 because we're moving so fast. Every day we're like hitting refresh on what's happening right now, right? That was a huge story, but rates have basically stopped moving. And so they're not really a driver anymore. So what's moving fast right now? Supply. Construction starts down 77%. It's a supply side that's the big story here, not interest rates. And that's why it's a way bigger number than any rate cut you'd hope for. You'd have to have an extraordinary rate cut for that to move the needle right now, right? So even if your deal needs the Fed to bail you out, it was never a great deal to begin with. Supply is the story. So supply is a story, and that's the one thing no one's talking about right now. The other thing that no one's talking about right now is affordability. Right, especially with respect to rental housing. Right, so right now, buying a home costs about 105% more per month than renting a similar one. That's more than double. And this is not a small number. It is the biggest gap we've had in modern history, that gap between renting and owning a home. And on top of the affordability gap, we're also short somewhere between 3.7 and 4.9 million housing units in this country. And that's not me saying it. That's Freddie Mac saying that. It's every credible source on the planet you can find is there a housing shortage. Now, when your mortgage payment is twice your rent payment, well, what do you think you're going to do? People are seriously thinking about, well, I'm not going to buy a house. I'm just going to rent. it's a 50% discount. And that's what people are doing, especially millennials and Gen Z. And that's kind of the long-term floor under the apartment demand, right? It doesn't go away when a Fed cuts rate by 50 basis points or even a 1%. So we have a supply problem and we have a huge demand problem. And obviously, why does this matter? Is because it's going to push demand up multifamily and push up rents and therefore the values. The problem is we haven't seen that. And the other irritating thing is we've been projecting that. Everybody projected that to happen late last year in 25. And it hasn't happened yet. I was like, oh my gosh, maybe the absorption was slower. We had more supply, less demand, blah, blah, blah. So we're all waiting for essentially this thing to happen that was projected last year where the absorption does, in fact, outstrip the supply. It's coming. Don't know exactly when, and it's going to vary by metro. So what does all of this mean to you, right? Whether you're a passive investor or active investor, right? You got to watch these things converging, right? So when the wheels came off, things converged in a negative way. And right now what's happening is things are converging in a positive way if you want to make money in multifamily, right? So really look at these study things, put them into Claude, put them in chat, ask, fact check what I'm saying right now and look at these trends, right? Because the smart money has already started moving into this asset class again. Transaction volume in the third quarter of last year. It was already up 19% year over year. And I remember it was talked about at best ever, the increase in, John Chang talked about it, Marcus Millichap, that he projects a significant increase in volume. And in fact, anecdotally, literally over the last 6 weeks, I'm seeing it as well. There's a lot more distress on the market. A lot more people are buying. They're like, this is taking a long time. Why don't I just sell? And so overall, what we're going to see is the volume transacting as well as the smart money, like I said, is also starting to move into the asset class. So study this right now. And the hard thing about it where we are right now is to remove yourself from the emotion of investing. So what I mean by that is 3 years ago, there was greed, basically driving our investing. Everybody was jumping in multifamily, even though objectively, we're really at the top of the market. Right? The problem is we've been at the top of the market for 7 years. We were just more on top of the market, and the projection was, well, shoot, it's going to go up. Right? Just like everybody's saying in the stock market, well, surely it's going to keep going up. Now, though, the pendulum has swung where the fundamentals are really pointing to we are bouncing and have been bouncing around the bottom of the market. Right? Again, we don't know how long it's going to be in the bottom of the market, but because of the reasons I said earlier about the dearth in supply and the ongoing demand for affordable housing is going to push the asset class back up. So study this in more detail, get educated about it, and then make your move so that you can see this happening, because you're not going to see this uptick in rent in the news. It's going to be a small, subtle uptick where all of a sudden a unit fills for $25 or $50 more a month. That's huge, okay? And we're in the business, we're going to see it. If you're already talking to brokers or you're a passive investor talking to operators, and they're starting to see that, that is a sign that that market now has turned around. So make sure you educate yourself, become that sophisticated investor, remove some of the emotion, and really take advantage of what's coming next.